This conference will now be recorded.
Good evening, ladies and gentlemen. This is Clueless Day Trading Frank. This is slightly 1 day delayed, T plus one, as we say in the business, strategic webinar. It is March 28, 2019, end of the first quarter, coming up tomorrow from a business calendar date, not a calendar date, business date. It is approximately 8:47 p.m. Eastern Standard Time on absolutely a glorious evening here on the East Coast, at least on the New York City, New Jersey waterfront where I live. And full disclosure, this is purely for financial education, not for any solicitation or advice. And hopefully tonight we'll share some nuggets of wisdom on the market and help all members and free trial subscribers and anyone else out there with a internet connection who has full access to the YouTube channel. The session will be recorded, uploaded to the Google YouTube channel under Clueless 8 Trading. That's our outlet or our organic marketing to the world. Quick reminder, as I always do, and I know many of you have been following the Instagram account where I post the highlights of some powerful trades that we do, large profits on the Instagram account, mostly around 9 to 10 p.m. or so Eastern Standard Time. So feel free to do so and pass the word around. It's free. Just open up an Instagram account if you don't have one, create one, and then just hit follow. And you love what you see, and you learn a lot of stuff, and it is there every evening. Most importantly, it is not the Instagram account is not just to full disclosure. It is not real-time content. It is simply highlights of the current day's trades posted in the form of charts and on and that's it. So helps everyone out by looking at a quick review of what you might have missed or what you were involved in, and certainly follow us there. We certainly want the follower account up there. Okay. On that note, like I always do with these webinars, like to keep it, reasonably within the hour or less. Is cover some broad points. So one of the things that I was thinking about tonight, as I took my dogs out for a nice walk, and before that had a nice chilled IPA beer, just to chill down from the whole day's work, is why do we always worry about the market so much? We are always scared, all of us. We're always nervous, we're always stressed, like, oh my God, here comes a 50-point drop, and is this going to be the start of the next bear market? All kinds of stuff. From a behavioral finance standpoint, what do you think, Trina? Why are we always like nervous and a little bit stressed about everything that goes on? Whatever trade we're in, where the markets are going, and all that, all those things. Why do you think that happens?
I mean, just emotion and money.
Okay, you covered 2 points: emotions, money, and what's it created by? Complete volatility, right?
Right.
Yes, and that volatility is created by for sometimes the right reasons, or and many times the wrong reasons, because it's manipulative volatility, manipulation by algorithmic high frequency trading black box programs, which just want to create noise. So the noise, what it does from a behavioral finance standpoint, what we call here at Clueless Day Trading behavioral game theory, is that it takes our focus away from the bigger picture to focusing on the immediacy, what we call what's called in the business called recency bias, like what happened over the last 15 minutes type of thing. And we're all guilty of that. We're all a victim of that, I should say. Okay, myself included. I tend to manage it much better than other people. And we're going to focus on this couple of things tonight because it's very, very important. So we lose focus of where the overall picture is, what the daily charts look like, what the 4-hour charts look like, what the weekly charts look like, and we tend to react to the immediacy of the moment, which is the big bang of a quick flash crash, 50 points down, 100 points down, and then it reverts back. Case in point today, case in point yesterday, and then the market goes up 100 points by the end of the day. So I think we can all agree on the fact that we need to, one way or the other, try to not make stupid moves, which we all do, by the way. Okay, I'm not going to shy away and say I don't do. If I have a large position on a whole bunch of options, I am going to basically think twice and, oh my God, is this going down? Am I going to be down 40% on a whole bunch of options? Much taller, larger figures, and I don't worry about it that much when it's smaller position size. And that's why I say, when in times of extreme volatility, which we, by the way, on the longer term charts, we are not, and you're looking at that right now in the form of this S&P E-mini charts. This is a daily chart. You can clearly see here that aside from the 22nd of March, we really haven't incurred any type of massive volatility. Yes, we did these large candles are a whole bunch of 300-400 point types of drops. But overall, we tend to be monkeys on hot tin roof. And I say we because I am also a victim of that sometimes, because I'm watching the chart so closely on the 15 minutes, on the 1 hour, on the 5, and I don't really follow the 5 minutes that much, the 15 minutes and the 1 hour, and I'm telling you, okay, well, what's going on? But then at the same time, I flip out. I flip my charts on one of my screens, and I have quite a few screens, obviously, and look to see what is happening on the bigger picture. Forget the recency bias. Are my eyes on the prize? And I say, okay, it's cool. Just chill, sit back, chill, and look to see where I can allocate more funds towards dollar cost averaging, or re-enter a position that I sold in the morning on a big gap up open. And is the overall trend still higher? And that's how I make my determination. So for some of you who are newer to trading, or who have been trading just based on prices, and your head's getting completely, messed up by the volatility, intraday volatility, do make a habit of looking at the daily charts, looking at the weekly charts, and then making a determination whether or not it's worth staying in that position. And in this case, I'm showing you the SPYs, the real market, what we call the real traders market, as I like to put on Instagram. And these are the actual live version of the SPYs and the SPX, which is the E-mini futures. And then say, okay, things are going to really look really bad, like it did here, okay, like it did on the week of January 17 till the 24th, and then the market bottom, and this happened, and this is where we are right now. So if I may ask you guys a question, which is going to help everyone else, because interaction between my members teaches me a lot, believe me, and because I am constantly learning how to read the markets, is if I may ask you guys, when you look at a chart like this, which is a weekly chart, not like what's going to happen tomorrow within the first hour, what's going to happen in the next 2 days, but the weekly chart of the S&P 500, look through the lenses of the E-minis or the actual futures, does this look like a bearish or bullish chart? Mike? First question goes to Mike. Mike, does this look like a bullish or a bearish chart?
It's a bullish chart.
It is a bullish chart. I mean, I'm talking about the first instinct you get. I'm not talking about the whole analysis of the intraday candle. I mean, the weekly candles and anything. But I'm just talking about the first thing that we look at when we look at a chart, because charts speak volumes well beyond what our the little voices in our heads tell us. So good. And Trina?
Bullish.
Okay. So bottom line is we don't know. But when we look at a technical picture of the overall market, what it's telling us, what is so important about tactical charts? What is the most important thing? What is it telling us? Is it just a bunch of candles and pictures? What does each of these candles represent? Mike, what do these candles represent?
It's a weekly activity.
That's not the answer I'm
Weekly.
looking for. No. Think about it in a more simplistic form, because that is the essence, the real wisdom of the markets. What are these candles? What are they representing? What makes markets move up or down?
Activity in the market. I don't know.
Okay, what makes markets move up and down? Stocks move up and down.
Buying and selling.
That's right. What is buying
People's
and selling
anticipation.
entail? Okay, no, don't go that further. Forget about the anticipation part. The buying and selling is done through what? The buying and selling, what is the essential derivative of the buying and selling? What is the core? I'm already giving you the answer. So what is the core? Because we have to understand the simplicity of
Oh,
markets in order
supply
to.
and demand. Is that what you're
No,
looking?
you're getting too complicated. What constitutes buying and selling? What is the underlying asset? What is the underlying asset that creates buying and selling? You know the answer. It's right
Money.
there. Huh? Money. Did you say money?
Yeah.
There you go. That's it. That is the simplistic answer. So each of these candles, going back to the original question, each of these candles represent millions and billions of dollars that are going in and out of the market. That is the beauty about candlestick dynamics. That is the beauty about trading charts. And the more, once we start to understand the power of simplicity, what we, POS, maybe I'll make that term up, not piece of shit, excuse me, but the power of simplicity, we're going to be better traders. We're going to be better investors. We're not going to be as victimized by the algorithmic high frequency trading black box programs, which have only one intention: to take your money away by creating excessive noise, aka volatility, on every slice of news that's coming out in the market on an intraday basis. So in order to defeat that, in order not to do stupid things, we have to keep an eye on the bigger picture and manage our P&L by looking at the shorter and the medium term picture of what is happening with the markets. If you're up a lot, you're like, okay, fine. I see the bigger picture, but I'm going to take that profit, move the strikes up on those options, because we're talking about options here. Or I'm going to stick with it. I'm going to buy more time. Instead of 1 month out or 1 week out, I'm going to buy 3 months out. Don't go too far ahead, because we don't really know what's going to happen, more than 3 months out. That's my, from what I have learned about the markets, from way back. And since I became a professional trader since 2011, it's been 8 years. 8 years. I like the number 8. Is that I can't project out that much, because there's way too many unknown factors out there. So I can't tell you what the markets are going to be a year from now. Yes, I can show you a chart and this and that, but I can pretty much predict very well where the markets are going to be a month from now or 3 months from now, and that should keep us in the game. So yes, you're right, Mike. It's the money. So each of these candles are signifying how many billions of dollars are going in and out of the market. So when you look at a chart and you both tell me that first instance it looks bullish, that means billions of dollars are sticking in there. Now, anything can happen. We can have a black swan event. We can have a China trade deal collapse. We can have a complete meltdown in the Middle East. We can have the UK Brexit crap completely blow out of proportion, and there's a no deal Brexit, and then we have these type of candles which are 400-500 points down or 600 points down or more. So coming back to it, we need to look at the bigger picture and manage our profits by looking at the shorter term picture that I present every single day. Okay, so that's good. So Trina, you're with me, right?
Yep.
Yep. Simplicity is wisdom. In life, as in trading, like I say, real traders, and I like to consider myself a real trader because I live and breathe this stuff 24/7, has taught me more about life than I have by working on Wall Street or by growing up. Trading will make you a better person if you know, because like Mike said, and you said, the emotions about dealing with real money can nothing but be a teacher. So let's think about that for a minute. Okay. So saying all that, the behavioral finance part over, let's talk about the macro stuff. The macro stuff we already know. I've talked about it quite extensively. We have the UK Brexit vote again coming up tomorrow. Remember one thing about life's game theory. The more something keeps on happening, then the overall reaction to it gets minimized. It's called the law of diminishing returns. Does anyone know what that is? While you're doing that, I'm setting up the charts. Anyone know the definition of law of diminishing returns? Just say yes or
No.
no. Okay.
Yes, yes.
Mike probably does. Love you, Mike. Seriously. Law of diminishing returns, in simplistic terms, it's an economic term that if something keeps on happening more and more, then your reaction to it will diminish accordingly. When something initially happens, give you an example. Let's say you get into an accident all of a sudden. It's like a horrific event, like, oh my God, you're safe. But you're like, oh my God, my wall's falling apart. Look at my fender, like it's all over. You live in LA, you probably had a couple of accidents on the freeway and this and that. I never lived in LA. Okay. And we don't have enough big, large highways in New York to deal with that many accidents. But as it happens, then you next time you react a little bit less. Next time you react a little bit less. This is the way I used to tell my clients back on Wall Street. As I've said many times, and not that I say it with pride, I say it with sorrow, I'm a survivor of 9/11. I mean, literally, I would be blown up like 15 if I left the World Trade Center 15 minutes earlier, because that was my passage walk through as I went to my office on Wall Street. I used to live right across the river at that time. So the key is that I used to tell my clients, like, if something like 9/11 didn't rock the markets, and then after a week after we opened, we were closed for 7 days, then the markets basically based and then started to go up, and we never looked back. The markets actually bottomed because of the Enron crisis back, I believe, in the mid 2002, July of 2002 or something like that. Okay, it wasn't. I used to test my clients. They say, hey, when do you think the markets really bottomed? They said, oh, right after 9/11. No, it didn't. It was a year later. So I said, there's something worse than 9/11 has to happen in order for our markets to completely crumble. And so it's called the law of diminishing returns. I'm just saying it very simplistically. It's like something happens over and over again. The reaction to it, or your overall, what's the word I'm looking for? Your impact on it diminishes. Okay, so the key is that whether it's the first Brexit was like, oh my God, right? The first credit crisis, which really happened in 1998, pretty much around the time that I saw it on Wall Street, in 1996, it was just like, oh my God, it's called the Asian flu. It's like the whole world's going to melt. And so every crisis hardens real investors, the really smart investors, into and the reaction is less. Mom and pop, on the other hand, think that every single crisis that happens is going to be worse than the next one. And that's what the noise that comes out of the media. I'm not going to get into the fake media, the real media. These guys are doing their job. And they're like, every little thing that happens is just like, oh my God, this is the beginning of the next big one. There is no big one, because if you look at the history of the financial markets from 100, 150 years ago, whenever it started, right, all the way back, the market has actually been going higher. Draw a line, like Gartman used to say. What happened to Dennis Gartman? Did they fire him? He's like nowhere around. It's like it goes from bottom left to top right. So without deliberating on it too much, markets want to go higher, at least by looking at the overall longer term charts. They want to go higher. And what we do here at Clueless Trading, we show you at what levels they want to go, and along the way where the hiccups are, where you need to take profits, and that's the shorter to intermediate term charts. That applies to stocks, that applies to the overall indices that we trade, like the SPY, SPX, QQQ, DIA, IWM, which I haven't really traded that often lately, but I shall certainly start. So we have the Brexit situation, which is a law of diminishing returns. Whatever happens, the markets are going to absorb it, then they're going to ramp. We have the US-China trade negotiations, which in my opinion are going very well, even though it might take longer than expected, which the markets certainly will take it in stride. We have the bond yield inversion, yield curve inversion situation going on, yet bond yields have stabilized and going higher. I'll cover that on the Sunday webinar, which is good. That's the reason why Goldman Sachs was up about 1% today, because banks don't like yield inversions. And what else risk am I looking at? North Korea, the fat guy's just eating burgers and ducks and whatever he's eating, and no one really gives a crap about him anymore. China's economy, not the trade stuff, has some big bubbles of risk in their shadow banking sector. And that's something that all of a sudden can crop up. They are a controlled capitalist economy. They're in fact far more capitalist than we are, believe it or not. And because we like to call ourselves capitalists, yes, we practice some stupid forms of socialism, not because of AOC or whatever, but stupid forms of socialism by telling our companies partly what to do and what not to do. That's what controlled economies do. Free capitalist systems never tell private business what to do. Read Ayn Rand. So even when this is one big disagreement with my New York boy, Donald Trump, is when he's trying to dictate to US business what they should do or not do. I know it's being done because he believes, or for politics or for whatever. I think it's wrong. Doesn't serve any purpose whatsoever, because US business, compared to every other international global business that's out there, US corporations, believe it or not, overall are the most altruistic and generous corporations ever. It's a fact. So, without getting into it too much, governmental risk is a problem. Governmental regulations is a problem. Presidential tweets against US companies is a problem. We cannot have that, but we can't stop it. So those are the type of risks that are still there. Aside from that, there's intraday volatility, there is earnings risk, there is global slowdown happening in Europe. Trade friction has a lot to do with it. But aside from that, we are okay. But we have, as tactical traders, we use our charts as a measure, as a roadmap to what might be happening. Not that easy, very difficult. What I do for all of you, what I do for myself, this is difficult stuff. Okay, remember, crusade trading, and I don't mean in a bad way, to no disrespect to anyone else, is not what any is not like your atypical bullshit trading service out there telling you they're geniuses because they offered you 2 points on a stock. We do that every day and a lot more. We're talking about swing trades which will generate significant amounts of money. Even things like pizza, PZZA, Papa John's. Those options went from 40 cents to $3+. That's 600% on your money if you had the patience to just sit there, average cost, keep on buying those 40-cent calls, and you could sell them at $3+ today. And those are the April 1850 calls. That's what we do here at Crusade Trading. In the meantime, sure, we do day trades. But the real big money, in my opinion, aside from the volatility trades that can be big money during the day, 150, 200% on flash crashes and reflex bounces, the real big money is made on swing trades. So when somebody says, oh, I don't have that much time to really follow the market, that's the reason I can't follow your service, I said complete hogwash. You could sit there on the swing trades, whether it be a Chipotle from 250 to 710. Where did Chipotle go today? 703. Whether it be Ulta Beauty, way back, and please listen to my videos from way back there, from $200 to $350. Whether Lululemon, that was a way back swing trade from way back there, from 83, 85, $90 to 164, and a lot more to go. That thing's going to hit 200 plus. And when traders come and tell me, oh, well, somebody tries to overanalyze a particular retail stock, it's a hogwash. Do I go around buying Lulu stretch pants, men's fashions? No, I don't. Do I have Lulu, what do you call, hoodies? Yeah, I bought some on sale. They're amazing. To make me look good, actually, too. Not that any of you know what I look like. I'm like 400 pounds and really, really, out of shape. All right, just kidding. Some of you know, what myself and my family look like. So anyway, to make a long story short, personal opinions don't matter. So coming down to it, let's get into the technicals at this point, and let's cover this real quick, and then we're going to talk about some stocks. We have already established the fact that overall trend in the market, or which I want to show this before I forget, because I always do at the end of the day, end of the webinars, is let's take a look at one of my favorite, I've been using it for many, many years, the S&P SPX 533 chart. This is the weekly chart of the SPX 533. Change the color. Still looks good. Still looks good. And on top of that, we have a stochastic crossover right there. Let me clean this out and show it to you guys. Look at that. Every time you have a stow crossover like that, markets tend to go higher for a bit. And these type of dramatic crossovers off these lows, the markets tend to go a lot higher. This is a short-term crossover happening. Markets can, in my opinion, I will never use the word very easily, but tactically can get towards the 2,900 S&P levels. If you play your cards right, you got another 300 to 500 points in the Dow that you can make some serious money on. Now you think that the market's going to show you the way by you guys all staring at prices during the day. No, it's not. Because the algos are not in the business of making your life easy. What's in the business of making your life easy, if you focus, understand the charts, understand that the overall picture and the short-term picture is what Clueless 8 trading tactical charts do for you. That's what makes your life easy, only if you don't make it complicated in your head. But if you think that every day the market's going to give you a green flag to buy and a red flag to sell, then you are still stuck in the same morass and the same loop that has kept you completely underwater for all these years, and you have not made any real money in the market. You know exactly what we're talking about. So, saying all that, it's time for mental calibration. So this is good. This is overall, this is good. These are all in the past, by the way. These ones, this is happening right now. This is your weekly chart. This is good. Look at the histograms on the MACD. The MACDs on the histogram. Trina, what do you think in simplistic terms what they mean when you see these big pillars of green? Go ahead, just tell me.
Um,
Now, what's in
buying,
simplistic?
I guess. Money going into the market.
It means strength. It means overall underlying strength. That's what it means. Yes, that's the money going in the market is the reason, but it basically means that the market is telling you on a weekly basis, which means on a slightly medium to longer term basis, we're okay. Don't worry about the intraday garbage. We're okay. When something like this happens, that's when the markets do this. When you have an accelerating downward slope on the histograms, on the MACD, and do look up the definition on Investopedia so you can educate yourself a little bit more. It basically, and I like to keep things simple. I like to explain to my members, like I used to explain to my kids. I mean, to my kids. I mean, I have one son. When he was like 13, 14 years old, and now he's 20. You think I can explain this to him right now? Yeah, good luck. So the thing is that this is bad, this is good. And when that coincides with the overall structure, remember, charts are about structure. And what it's telling you, like you guys already explained, answered before, money going in is what creates the candles. Candles don't just appear just because somebody's lighting them. This isn't like going to Pier 1 or somewhere. Candlestick dynamics are telling you how much money is going in the market or being taken out of the market. Green candles are good, red candles are bad. And all the structures of candles, from a red to a green, an inverted hammer, a hammer, all this stuff is simply signals of whether or not it's worth being in that trade for a while or whether to leave. Everyone understands that, right?
Yes.
Okay. Because I live and breathe the candles. That's why I don't get bothered as much as some of you do. And I'm neither heavily bullish on the markets, neither am I heavily bearish. Overall picture looks pretty bullish. Anything can change. Short term, I adjust my positions as I go along. But overall picture in the market, certainly bullish, longer term. So saying all that, this is good. This is showing you underlying strength. This is the weekly chart. Let's take a look at the daily. Because remember, every time frame that you look at, and this is for everybody else who's going to listen to this, ladies and gentlemen, to all my great members and many more who are going to come. Which reminds me, how about some referrals? How about saying, hey, Frank, thank you. Here's some referrals. They're going to join. Let's make it happen, all right? Seriously, we're into organic marketing. 99% of our people come through referrals. So please spread the word around, make a little effort, bring some people in. It's always good. It's always good. So let's take a look at the weekly. Now, the weekly chart is really like messed up, right? As if anyone can read this. I don't think so. So why? Because it's like goes all the way back to Feb of 2018. So let's try to bring it down. And anyone who wants to learn about all this stuff, DM me on Twitter, send me an email at support@clueless8.com or frank.r@clueless8.com, or come into the chat room, ask me, and I'll tell you, what you need to do to understand this stuff. So let's go back 4 months. Now you're going to see a clearer picture. Beautiful. Like we say out here in New York, it's beautiful. Bellissimo. Gorgeous. Hang out in Little Italy. Have a nice calzone. Go have a nice little pasta, carbonara. All right? Don't shoot your friend because he owes you money. Just kidding. All right. So this is exciting. Look at these. Remember, I learned technicals from the basic way, back from my Wall Street days. I explained all that stuff. So then I sat on the seminars and technical training webinars, some of the webinars, actual direct events, some of the biggest technical names out there back on the Wall Street days. And then I adapted it. And then I said, I want to understand this in a simple way. And then I started drawing lines on my charts, and they started working. And I'm like, why am I not following them? So my mantra was, I got to believe my own shit. Dead serious. I really, Mike, you okay?
Yes. Yes.
Good, because, okay, I heard some heavy breathing. I knew you were excited. So, all right. So the thing is that I started to believe my own crap. And if what on my mission, my goal is that I really need to believe my own crap to the point that I need to follow it from like A to Z. And I'm still working towards it. All right. So when you see something like this, then this is a bull flag. Let's draw this out. Oops. Let's clean this out. Let's do this. Nope, I'm trying to draw this straight line. There we go. Successful. What do you call this, Trina?
Full flag?
That's right. I mean, you see, never answer a question with a kind of a question-like thing. Like, be certain about it. See, one of the things I learned about life, and I'm 50 plus years old, and I am not 400 pounds, by the way. I actually look pretty young. Is is the fact that just say with confidence, right or wrong, have an opinion. Like Dick Tracy said, a man or a woman without an opinion is no man or woman. Well, he actually said man only. Okay? So just say, don't say, is it a bull flag? No, it's a bull flag. By now you should know that. Now, if bull flag breaks, if we break below 2750, then it's not a bull flag. Then
Hey
it's
Frank,
going,
this is the daily chart.
yeah, it's on the daily chart. I'm showing you the daily chart right
Oh,
now. Yeah, I moved
okay. I
from the
thought you were
weekly.
talking about.
No, we were talking about the weekly, and then now we're talking about the daily.
Okay,
So
cool.
this is a bull flag. Bull flags look like this. These are very powerful bull flags. I've shown you many of those. Bull flags can look as a pennant. Bull flags can look as a consolidation sideways. We've seen those. This is when traders get screwed in their head, like, oh my God, every day when it's going to break out, like, relax. It's just trading in a range. That's why I keep on showing trading ranges every day. You buy the bottom end of the range, you sell the top end of the range, and when it breaks out, you jump in harder. So that's a bull flag. Now, if the bull flag breaks below these levels, and I show more complicated charts explaining everything daily on my Twitter feed, then you take evasive action. But by the time it breaks, it's going to basically hit this huge support level at 27.25 and create what? a W pattern, a dragon bullish, which we are creating right now, have created right now, and in the progress of creating on what? On the S&P 500. You did review my, I'm sure you have taken a minute, all of you and anyone else who will be listening to this, my Twitter feed and showing the W pattern both on the 1 hour, actually on the 1 hour charts, on the shorter term charts on the S&P 500. Don't say no. If you say no, slap yourself, go take a look at it. So that's what's going on. So this is good. This is good. Let's keep it simple. This is slightly negative, and we would like the histograms to basically move up into the positive. What we have to watch out for is whether or not this bull flag breaks below. And that's when we look at the shorter term charts. Or does it break out? Because when it breaks out and heads towards 2850, 2875, mostly like 2850, you won't have a chance to buy it. The S, which reminds me, the SPY 282 calls. Forget the 280s, the 282 calls. At the low of the day were 75 cents. Well, when the market spiked up in the morning, they were at $1.44. Yesterday, they closed at $1.09. We bought it at 90 cents to $1. So you were up 45 to 50% on your money right at the open. What do I say at the open? Sell full or partial profits. Then it went to 75 cents and went back to $1.23. So 50 cents or 45 cents on 75, that's 60%. I'm not saying you can catch each one of that 60 cents from top to bottom, but you can catch that 60%, take 40% of that. This is not rocket science, guys. So this is good. This is good. Well, that was in the past. Who cares about what happened in the first part of March? But we're not there. The past is the past. The present is where you really put your hard work in and your head. And the future is for you to take if you're only prepared at the present. Preparation is 80% of luck. Otherwise, keep on buying those. By the way, Mike, congratulations. Somebody in Wisconsin won the $750 million ticket.
That's what I heard.
Congratulations. Congratulations. In the heartland. Good stuff. Make sure that he's one of your buddies and he gives you about 10 million of that. And then you call me. So great. So that's it. Let's move this out. This is your the slanted W pattern. It's where we are right now. My opinion, we are still looking to get towards this first promised land, which is 2835. This is your support at 2791 or 2800 in the S&P, and you can make some pretty decent money without putting in too much money. Like I said, during sharp intraday volatility, you want to basically minimize your position sizes. And I've shown this chart. But overall, it is still looking like a W. And what is this called, Trina? I just explained it. What is this called?
Dragon bullish?
No, what is this called? Think and answer, Trina. Because whatever, what I'm doing right now is everyone else is going to learn from this and your responses will help. What is this? What is this? When something moves in between this, what is this called? I just explained. Okay, listen, I'm not going to waste your time. It's a frigging trading range.
Yeah.
Exactly. Think simple. The more you train your mind to think simple, the better of a trader you will be. It's a trading range. We're in a trading range. And we've been in a trading range since the 24th. Trading range. So even if it comes to the bottom of the trading range, it's going to hold the 2800. You break that, that's a different story. But otherwise, we are just trading between a range of 27.91 to 28.35. So if that's the case, 28.35. And I'm explaining all this for everyone else. And Trina and Mike have been great participants. That means you're basically trading in a range of about 300 Dow points. See, CNBC and Fox Financial News and Bloomberg's not going to ever explain anything like this, or any other service will explain it like this, or Kramer for that matter, even though he gives some good nuggets of information time to time. This is the 300-point trading range. It's nothing to fear. You have to manage that trading range. You got to buy that lower end of the trading range and sell the upper end of the trading range. Whether it gets up here or whether it gets close, you still got to buy the bottom end of the trading range. The markets will decide, and we'll figure out by looking at many other internals on my other charts, whether we're going to break out of here, which I think we will, and head towards 28.60, or whether or not we're going to basically fall below the trading range. We will fall below the trading range if Brexit completely craps and there is a no-deal Brexit, in which case the markets will fall 1,000 points. If President Trump completely screws up the China deal, which I don't think he is, he's got great people working on it, then we will fall 2,000 points or 1,000 points. Okay? But aside from that, we're in a trading range. Like we say in New York, capiche? You ever see Godfather? Godfather 1, 2, 3. Anyone?
Yep.
There you go. So you know all the lingo. So that's it. What's a capo? You seen Godfather? What's a capo?
Captain.
I have no idea. It's been a while.
Okay, capo is basically the foot soldier, the person who basically does, the guy who does all the dirty work. So we are all capos of the market. Okay. So there you go. The market's a godfather. We are the lieutenants who do the job, except we're very smart in the sense that we know what the big bosses are going to do, so we do it. So we make sure that we don't get, we're not the next ones to be lying on the sidewalk. You got it? So there you go. So saying all that, without analyzing Godfather too much, is the fact that we're in a trading range. If somebody wants to look at it in a bigger way, from a swing chart, this is your intermediate trading range. This is your larger trading range. So it doesn't matter what the friggin' noise is, what Santoli's saying, what the very nice smiling, and they're like giggling half the time, reporters on CNBC are saying. I don't know why they giggle sometimes. It's like, what are they giggling about? In trying to make head or tail of what's happening in the markets, you follow the charts. So we are on the lower 50th percentile of the trading range right now. Once we get into this range, the market is never going to give you a green light and say we're going to go there. You have to look at my alerts. You have to basically just follow my charts, the Clueless 8 trading charts. Because if you're not set up, you're never going to make money as it jettisons into this trading range. What are you going to do? It's going to come here and say, okay, buy me. No, it's going to shoot out. And you're going to be like, oh, let me buy it here. And then next thing you know, it comes down. Always have to be here. Always have to be here. That's it. So tonight's session really was about understanding the bigger picture, trading the smaller picture, because if you don't understand the simplicity of what's going on, and these charts are so clear. What is this yellow box, Trina?
The trading range.
Thank you. I was really hoping you didn't come back with some complicated answer. Thank you. Yes, it's a trading range. I can extend it a little bit more. There you go. That's actually more clear. That's your trading range. 28.35, the Berlin Wall. Actually, the Berlin Wall is up here. So this is the Wisconsin wall, where Mike keeps every other state from coming into the beautiful state of Wisconsin, which, by the way, I have visited up in the northern part, the lake part, where they have all the best cheese and the Scandinavian. Well, I was a teenager at that time. That was a long time ago. All the beautiful Scandinavian women. Just kidding. I was a teenager with my parents, so they all looked at me like, "Wow, look at you." I'm like, "Okay, thank you." The whitefish and all that good stuff. Great, great stuff. Great state. So anyway, so now you know the trading range. We break out of the trading range. There's your box. We are box, ladies and gentlemen, right there. It's a lot of money when it comes to options. We get there. Nothing will happen in a straight line. Pattern symmetry dictates that this was almost a straight line in between sharp moves. Pattern symmetry dictates that it will also, and I will say this with, this should make everyone happy, that if you're set up right, this will happen very fast, very quick in the first week of April. Okay? Mark my words. I've been right more than 70% of the time. So I'll go with it. All right? This will happen very fast, very quickly, just the way this happened very fast, very quickly. This will happen. This will be good for 200 to 300% on your money. Do what you need to do, but please stop freaking out over 30, 40-point drops in the market. Then the market ends up 100 points. Cleanest way to play it is the SPY, QQQ. DIA is actually the cleanest way to play it. DIA and SPY. IWM has its own kind of characteristic. QQQ has its own characteristics depending on the powerhouses of Google, Apple, Tesla, Netflix, and we know that some of those were under big pressure today because of the Lyft IPO tomorrow. The FANGs and the big tech IPOs today were being used as ATM machines to take money out to pay for the pre-allotment, pre-subscription of the IPO. You have to commit that money, so you have to have that money. So whether you put that money in and whether you keep it or not, it doesn't matter, but you have that money allocated, placed in with the investment banks running the Lyft IPO, and the Lyft IPO is tomorrow. Don't ask me to get excited about the Lyft IPO. What the heck do I know? Okay, I think it's garbage. So that's it. I think this move will happen within the first week of April before tax day. Please be prepared, make some money, and just do it. In the meantime, we're in a trading range, so if we fall here, you better have cash on the side. Then this is a gift. This level out here around the 2789, 2791 on the E-minis and 2800 or so on the S&P is a gift based on the trading range. That's it. On that note, ladies and gentlemen, I think I've given you some great nuggets of wisdom. Simplicity is the key. Let's keep it that way. We are all struggling to find that sweet spot in our brains where we can be as calm as my Clueless A trading charts that I deliver every day. I work on it every day. On that note, lots of great winners today, all there on the Twitter feed, whether it be the PVH, whether it be the 5 below, whether it be Lulu, day before Shoe Carnival, whether it be Tesla ripping up, whether it be the SPYs ripping up, whether it be selective stocks like Domino's Pizza, which I told people to buy in the 240 range, up 14 bucks in a couple of days, or Papa John's from low 40s to going into the mid 50s, or Chipotle, which every day almost goes up. Just do it. Make it happen. God bless you all. Good night.